You're listening to episode 3 of Angel Insights, brought to you by SyndicateRoom. And on today's show, I'm extremely excited to welcome Darren Mulvihill. Darren was head of seed investing at Lucey Fund, as well as working with the UK Business Angels Association and Startup Grind. In today's amazing interview, we delve into what we should look for in fellow co-investors and how to know how involved we really should be in our investments as angel investors. And for each episode of Angel Insights, there will be a special article produced displaying the content that we've talked about in today's episode, and you can find that on www.syndicateroom.com. But without further ado, it's time to welcome Darren Mulvihill. Darren, welcome to Angel Insights. It's a pleasure to have you on the show.
Very, very happy to be here, Harry. Thanks for having me.
And now, can you start off by giving us a little background about you and how you made your entry into the investing world?
I suppose my entry into the investing world, like a lot of entries into things, was accidental. I would have been very active in my undergraduate years in college. I would have set up a business society with friends, and we would have had various, Irish and international business people come along to speak. And one of those people in our final year of college was a guy by the name of Ian Lucey. And I ended up going on to work for Ian for about 3.5 years in what was known and what is known as the Lucey Fund. And what they do is they ultimately find people with good ideas and they put different resources around them, sometimes cash, sometimes development resources and services, and sometimes, a combination of both. So I suppose my first role there was to source deal flow and carry out due diligence on a lot of the proposals that we were looking at the time. And I was involved with, a fair few transactions there. And ultimately moved to London with Lucey Fund, started to explore your wonderful city and all of the wonderful venture capitalists and startups and the very vibrant ecosystem you guys have. So I suppose I've developed somewhat of a basis for comparison between Ireland and the UK, and thankfully we're beginning to see, or we've always seen, a real, there's a lot of cross-pollination and a lot of Irish companies that have been priorly backed by Irish angels and VCs going on to raise further funds in the UK. So it's been a very interesting journey, and I wouldn't take anything back. It's been a great journey so far.
And you mentioned that you did a lot of DD with Lucey Fund. What is your process for DD? Do you have kind of a strategy that you go down when doing your DD?
I suppose there's a number of different types of DD you can do. So, the obvious things that a lot of people might want to understand is, who are the primary, I suppose there's a lot of the health checks. Who are the primary founders of the company? What are their histories in terms of, what did they do in their previous companies? What do their old bosses have to say about them? What were the other companies that they maybe were involved with as an entrepreneur before? And trying to, I suppose, understand that all of that fits in line with what is being presented to you in the context of the investment proposal.
And what tools did you use to assess that? Was it a simple LinkedIn search, or did it go deeper than that?
There is obviously an awful lot of online tools that are, very useful, like, Solo Check and LinkedIn and Twitter, and I suppose just trying to get a sense of a person. But one of the best things I suppose you can find yourself doing is actually going out and being around the entrepreneur, sitting in with them when they're, holding team meetings, sitting in with them when they're talking to previous investors, and, obviously then talking to some of their prior colleagues or prior business partners and bosses and so on. So, it's a mixture of qualitative and quantitative, if that makes any sense. So there's the hard data that can be found online, through Companies House and so on. But then there's also the more kind of human aspect of it, is what does this person actually like to work with, and are they who they say they are? Not in any great sinister way, but it is part of the process, as you know, Harry.
Absolutely. And with regards to the deal sourcing, if you would say there were 3 things that you looked for in an investment, what would they be in particular, and why?
I think one of the most widely agreed things when, looking at an investment, particularly at that early stage and angel stages, you look at the promoter, the CEO, and you look at, is it a guy or a girl that, you feel will go on to actually carry through on what they're planning, and are they as a person dynamic enough to withstand a lot of the hurdles and the setbacks that being an entrepreneur will throw at them. So I suppose it's really, people will be the first one. Certainly you need to get on with people, but you also need to show or see a track record, and you need to get a real, I suppose, feel for whether that person is going to carry through. The second thing, I suppose, that a lot of traditional investors would look for is, is it a big market? As an angel investor, if I'm looking for that 10 or 50 or 100x return, is it likely that the company is going to go on and raise venture capital? Will a venture capitalist touch this business? Is the business operating in a big enough market that will generate that type of return?
And what is a big enough market for you then? I mean, VCs look for billion-dollar markets. Isn't a $100 million market enough for you or not?
I suppose a $100 million market is enough for most people, Harry, as I'm sure you'd appreciate.
100 million?
I suppose really it depends what you're looking for. I mean, I've met angels out there that are looking, to, get 2 or 3 times their money back, or are doing it as a labour of love, and, hope for the best over, a 5 to 10 year period. But I've also met, venture capitalists, and most venture VCs, as I'm sure you know, are always looking for that deal that's going to return the fund, and that's going to, I suppose, provide that kickback that's going to help them, raise another one. And so the economics are broadly the same, but some angels might not be in it for that. They might not be in it for Facebook, if that makes any sense. Sure, but that's the way I would see it.
And then the third?
I suppose the third would be, I talked about the market, but in my view, if there's a competition, if the market is crowded and the company isn't providing a piece of technology that's in some way compelling to that market, or unique and distinct, then that can be a hindrance. And I suppose that what I'm ultimately trying to use is that horrible word, or maybe it's not horrible, but I'm trying to use that word, innovation. Is it providing something new and innovative to the market that it can get a large market share on before any of its subsequent competitors might catch up?
So would you say IP ownership's a big advantage to you when looking at investment?
I suppose it depends on the sector you're looking at. A lot of software companies, as you know, will, an awful lot of the time are just operating a piece of code sitting on a cloud server, and there's not very much you can patent. And then, you find other companies that have very special types of software, or, might be operating in the life sciences area where, that's a very high-tech and IP-driven industry. So, and particularly with the kind of stuff that I've done and the kind of companies that I've been involved with, they've predominantly been software companies. So, frankly, I suppose my answer would be no, Harry. But that's purely, I think, when you're looking at cloud and consumer software, it's a lot of the time it's very hard to, I suppose, to retain or kind of secure the IP early on. But I suppose when a big VC comes in and they find that this company's been working on very interesting technology, they generally make a move to try and protect it in some way down the line.
And in recent years, we've seen quite an explosion of kind of group investing or syndicate-style investing. What are your thoughts on this? Do you like co-investing?
I think it's a good idea. I don't mean to give you a bad answer, but it depends.
Okay.
There are certain instances where a company might need a bunch of investors to come in and help them very practically for the first 6 to 12 months or 2 years of the business, where they need a particular type of investor that's going to link them to customers, that's going to get the respect of other investors, to get them meetings to have further financing rounds. But at the same time, you can have a situation as well where a company is almost smothered by so many voices. So, trying to talk to them at once and giving conflicting opinions, which is often what happens sometimes when you have maybe 10 or 20 people on your cap table, who have some sort of line into you. It's not often the case. But I suppose the happy medium that I've observed is where you have a good syndicate made up of interesting investors who operate within that sector that you're going into, but who have a very strong lead angel. And what that lead angel can do is they can represent the interests of that syndicate as you go on and develop as a company, but they can also help you in a very practical sense. So you're really interfacing with one very strong angel who is leading the deal, as opposed to a symphony of angels, so to speak. So I suppose really, I think having a good lead investor at that angel stage, if you are raising from a large group of investors, can be very practical.
And how do you think you can identify a good lead investor? What are their kind of characteristics or types?
I suppose one of the things they would a lot of the time do, and from what I can see, is they would have the respect of their peers to be able to bring new people into the round. And they would be able to manage that process of, organising the terms and organising everyone so that they're happy, so that the deal can get transacted. And on the other hand, they're very good at helping the company. So if you wake up and your CTO, God love him or her, is not well, and you need to hire someone very quickly because you're going into a very important period in the company, they might have contacts on the other end of their network that could come in and hopefully help out in those dire circumstances. So that's the kind of example that I suppose the practical help that a good angel would give.
And I'd love to hear a bit about the tech and the funding scene in Dublin and Ireland in general. How's that playing out now?
I think there's an awful lot happening in Dublin. I left here about 18 months ago, and when I came into this scene, for want of a better word, I saw so many accelerators and so many startups all doing very exciting things. But what's happened since then is I've seen a real maturation in the ecosystem. And what I mean by that is we have more early stage funds. We have, I suppose, the best way to start with it would be we have a lot of old guard VC funds in Ireland that have been around for 20 or 30 years and have funded, the great and the good of Irish tech companies down through the years. But we now have a lot of more earlier stage VC funds that are coming in at that seed and Series A stage. And thankfully, they're beginning to show their mettle in that they're, as new funds, they're showing that they can actually bring companies in and get them ready for Series A and send them off to London or San Francisco.
Is that not increasing competition for angels with the proliferation of seed funds?
I think that, in a mature ecosystem, it generally kind of balances out. So you have very strong angels. You have very strong angels that a lot of companies will want to be involved with, and the VCs will also want their input. I suppose one of the kind of main arguments you keep seeing now at the minute is that angel syndicates is, some possibly disintermediating the Series A VCs, and that they're able to raise larger rounds. But I think that they kind of feed into each other, especially in an ecosystem as small as Dublin. You have a few angels, you have a lot of good VCs, and you have Enterprise Ireland, our state agency for startups, that are providing us with great support in terms of matching a lot of the funding that the angels, their VCs, that are putting in, and giving those companies a network of support around the world to help them grow and flourish as they find new markets. So I think it all bleeds into one, so to speak. But there is that argument obviously to be made that the bigger syndicates are potentially taking some deal flow off the Series A VCs. I have yet to see a very compelling argument for it, but it could be coming down the tracks.
And you said about numerous people on a cap table and maybe too much interference. How do you know as an angel investor how much interference is required? It's quite a difficult line, I imagine.
I suppose interference is probably not the word I might use, but
maybe,
I know what you mean.
Advice, input.
Yeah, exactly. I mean, I suppose a lot of the VCs I would see, a lot of the good VCs that I would see, a lot of what they're doing is they're finding companies and they're helping them get ready to really know how to do a Series A deal and what's involved and what they need, all the boxes they need to have ticked before they'll even get a serious meeting or a serious offer, and how to handle that process. So that's one very important thing. I think what the there are different companies where you might have an angel turn up a couple of days a week and do a bit of work for you. It doesn't work for all companies, but in some cases it does. And I suppose, generally speaking, a good angel will let will pick a founder that they have enough confidence in to get off and do what they need to do, and will only need to help when things really are in need.
And we're going to finish now with a quick fire round where I say a short statement and you give me your immediate thoughts. Okay?
Yeah, perfect.
The hardest aspect of angel investing.
Wow. The hardest aspect of angel investing, I would say it's about getting as much visibility on deal flow as possible, and I suppose going with your gut and doing enough due diligence, but at the same time getting to know the company well enough on a personal level to be able to comfortably go ahead and do a deal.
And when you say getting to know a company on a personal level, is that a simple meeting, once or twice, or is it a year-long, 2-year-long relationship?
You would find it's different in most cases, but I suppose my visibility on it would be that it depends if they start talking to the angel at that embryonic stage when they're coming out of an accelerator, then they might spend 6 to 12 months talking to them before they're ready to really have a product and have an investable proposition. But in other cases, it might take as little as 3 or 4 weeks or 2 or 3 months. It depends really. It depends on the stage of the company and when they start talking to angels.
And then, what's your favourite angel investing resource?
God, there's so many great blogs on angel and VC investing that I love. I suppose the 20-minute VC would be one, Harry.
Oh, thank you very much.
I love This Week in Startups by Jason Calacanis. I listen to it regularly.
Yeah, Jason's a great guy.
I know you've had him on the show too, which is a great win. I suppose I would look at people like Fred Wilson, Kieran O'Leary in Berlin, another Irish VC planted in Berlin, writes a great blog now and then. But in terms of particularly angels, I think I would look at Naval and people like that who are really at the cutting edge of, I suppose, thought leadership, for want of a better word, on where the angel market is going and how technology is pushing it forward.
Well, Darren, thank you so much for coming on the show. It's been an absolute pleasure chatting to you.
Perfect.
And don't forget to check out today's article featuring the content from today's interview with Darren on Syndicate Room's website at www.syndicateroom.com. We would absolutely love to hear what you think of the show, and you can tweet us at Syndicate Room or at Harry Stebbings or at Tom Britton. We'd absolutely love your feedback, and we look so forward to seeing you in the next episode.